welcome everyone to the Group E pitch session. Pitch session 5 of 5. I hope you enjoyed the previous 4. I certainly did. This is Investment Crowdfunding Week 2026, presented by Kingscrowd. I'm your host, Eric Cox. I'm the Chief Operating Officer of Netcapital. We are a technology company with a registered funding portal and broker-dealer that helps entrepreneurs raise capital online. This session is sponsored by Fidelity Investments. Thank you so much for the support of ICW and the founders joining us today. We're joined today with Teddy Lyons, who is a senior investment associate at Kingscrowd Capital, as our featured investor. Teddy will ask each founder a question after their pitch, and we'll share some closing thoughts before we vote. So thank you so much for joining. Welcome, Teddy.
Yeah, thanks so much, Eric.
Some quick housekeeping. Here's how today's session will work. We have 4 companies presenting today. Each founder gets about 5 minutes to pitch. I'll keep some time and give a signal so that they know when they're approaching the end here. After each pitch, Teddy will ask a question. We'll have a brief exchange with the founder. Please do use the chat or Q&A feature if you would like to propose questions. We'd like to keep this pretty interactive. At the close of the session, you, the audience, will vote for the company that makes the most compelling case. The top vote getter from Group E advances to the championship pitch session later today. And that will be at 5 p.m. Eastern time today. All 5 group winners compete for a $5,000 prize awarded directly towards their raise. Best of luck, everybody. All 4 companies you'll see today are actively raising capital right now. Links to their campaigns are in the event platform. So let's go ahead and get started. Kicking us off first, our very first presenter is Deep Patel with GigaWatt. Welcome to the stage, Deep.
We're building the Home Depot of solar and battery systems, a one-stop shop where customers can design, buy, and deploy complete energy systems. I'm Deep Patel, founder and CEO of GigaWatt. Quick note, this offering is being conducted through Start Engine. All the details are on the platform. So if you want to learn more, scan the QR code to get to the Start Engine page. So let's get started. Energy costs are rising fast. But solar is still too expensive, too complicated, and too slow to permit. Customers want energy independence, but the process is broken. We solve this with complete DIY solar and battery storage kits. Everything arrives together, engineered, compatible, and ready to install. We simplify what used to take multiple vendors into one seamless experience. Our customers look like Home Depot customers, DIYers, contractors, and home builders. People who want control, value, and trusted equipment. We've generated over $64 million in revenue just since 2019, and even more than that, going back to our foundings in 2006. We operate at a 32% gross margin with room to improve, and we have over $1 million in backlog. So the demand is real. This isn't a concept, we're already scaling. What makes us different is our platform. We combine design, plan drafting, interconnection, a full kit, and direct-to-consumer sales. No one offers the full stack other than us. It's a massive market. It's a $25 billion market. 10 billion of that is serviceable, and there's a fast $1 billion DIY segment. We're targeting a clear path to $100 million in revenue in the next 5 years. And we're already trusted by thousands of customers, both DIYers and professionals. This is a repeatable, proven model, and word of mouth and referrals are a major growth driver for us. We've shown consistent revenue with strong unit economics. We're now entering the scale phase, and we have projections to show a path to 100 million by 2029. We've built a team that understands solar, e-commerce, and operations. This isn't our first time building in this industry. We've combined technical expertise with execution. To reach 100 million, we're focused on 4 key areas. product development to expand our offering, inventory to support demand and improve margins, sales and marketing to accelerate our growth, and R&D to stay ahead of the market. This is about scaling what's already working. GigaWatt is building the Home Depot of energy. We're proven demand, strong margins, and a clear path to scale. Now it's about execution. Thank you.
Thank you so much, Deep. Welcoming Teddy back to the stage. Teddy, can you kick us off with questions, please?
Absolutely. Deep, great job. So your pitch is really partly that, turnkey residential solar is too expensive while bare bones do it yourself type options leaves customers stranded. So how big is the segment of customers who really want something in the middle? And what evidence do you have that this is really a large, enduring category rather than, a temporary reaction to pricing pressure today?
Yeah, solar's always been uh, wanted. There's a lot of demand for it. Then people get pricing and things like that, and there's all these people in the middle of it. And by the time it gets to the end user, it becomes unaffordable, so people fall out. And there's ways to do this by cutting out all the middlemen. And like yourself, Teddy, if you have a house, you could buy one of our kits and even hire an installer to install it and cut out a lot of the middlemen and save tens of thousands of dollars on your project. You can cut out distributors, sales agents, and other intermediaries in between the factory floor and your roof and save a bunch of money. So we believe the demand is strong. It's just the way it's being delivered to the end user, it's just inefficient.
Got it. Makes sense. And we have a question from the crowd here, which was going to be my next question. How does the end of solar tax credits impact your business?
It actually helps us even more because there's people exiting the market that really were thriving during that bloated phase where, the tax credit was there and they could charge a higher price and they could still get away with it. Now customers are still interested in solar and battery storage, even more so with this energy crisis and the war. But they want a more affordable way to do it. So we're teaching people you could still do this and it makes cost sense without the tax credit by this DIY model.
Got it. Great. We have another question here. Tell me about the actual installation process. How long does it take? Does your company help with setup? And is it hard to install?
It really depends on people's trade skills. It's do it your own way. And we have customers that are tradespeople that, they could follow our direction. We generate a plan set. We file all the interconnection paperwork. We help with the getting all the approvals. Then the kit gets to the job site and they follow our instructions and they can do it all on their own. Then we have customers that are more like project managers where they engage us, they get all their approvals with our help, and then they bring in an installer to install it. So we have those two segments of customers, and then we also have pros that are electricians, HVAC companies that have never done a solar system, and we help them do it for their clients. So if you have the trade skills, you can totally do this on your own. But if you don't, you can project manage it, hire a contractor, and do it for much more affordable than the traditional model.
Got it. Eric, do we have time for another one or
Looks like we do. We have time for probably one more.
cool? So it looks like your fiscal year 24 revenue was down about 23% year over year from fiscal year 23. I see that your estimated 2025 revenue showed a nice growth percentage there. But curious for that 2024, what specifically drove that revenue decline? Was it, indications of the market softening, a brand transition, shift towards better economics? Kind of what was it?
Yeah, there was a net metering transition in California that went from net metering 2 to 3. And the year before we had a big run up and then net metering 3 came into place, and we had a lower revenue during that period. Although we worked on our gross margins and actually increased our gross margin percentage in that year. So what we've been doing every year is focusing on our gross profit dollars.
Got it. Great. Makes sense, Deep. You have some more questions in the Q&A. Feel free to, go backstage and answer those.
Can I speak one in? It looks like we still have a little bit. I'm getting the message that we have
Yeah,
a
go
little bit
for
more
it.
time.
Sure.
Oh no, sorry, just kidding. Nope, got the indicator. That was it. Thank you, Steve. Got a little bit of a false
Yeah.
start there. Appreciate you so much, and thanks for the great question, Teddy.
Yeah. Thanks, everyone.
Thanks, Deep.
Okay. Bye-bye.
Bye.
Bye now. Fantastic. Thank you so much. Again, that was Deep Patel from GigaWatt. I saw a couple of questions regarding specific terms of the offering. He did share a QR code there, so you can go ahead and check that out and learn more about the investment opportunity. Already welcoming our next presenter to the stage. Thank you so much for joining. Next up, we have Gene Edelman with Azure Printed Homes. Come on in, Gene. Tell us a little bit about what you're building, please.
Eric, thank you so much. Hello, everybody. Great to see you all. So really excited to share the story of Azure. When this great event started, Tim Draper was the first one to go, and he said that he looks for industries that provide best service at high cost. Well, I'm in that industry. We're building a platform in construction that's totally automated and using robotics. And the problem we're trying to solve is there's tremendous housing shortages in US, globally, in LA, where we're based, with fires. Construction has terrible cost overruns, time overruns, and construction struggles with waste. It's the third worst polluter of all the industries. The way Azure solved this, and this is not just theory, it's actually happening every day. We started this company 4 years ago, and we have a 3D printed manufacturing platform. So we produce the modules themselves using robotics. It takes us 1 day to make a 20 by 10 large module unit. In traditional modular, it takes 3 months. We use AI to take a plan that architect can draw up and make it so that the 3D printer can understand. What this does is we produce units much faster, some 70% faster, and 30% less expensive. We are volumetric modular, so everything is done in the factory. When the unit leaves our doors, it has plumbing, electric. It just needs to be connected on site. And we have zero waste. So we use a lot of recycled plastic. We've used over 100,000 tons of recycled water bottles last year. So a real good solution for sustainability and for our environment. Here's a little video of how it works. I really encourage for people who are in LA to stop in and see it in action. And until yesterday, it was just in LA, but yesterday we had an incredible grand opening in Denver of our second factory. Colorado governor was with us for over an hour and saw some of this 3D printing in live. So it's a great sight to see. People don't believe that you can order a unit today and move in next month. And that's what we're making possible. We have a 5-step process. One is it takes configuration, takes just 1 hour. And that's unique in modular manufacturing. Usually modular manufacturers sell plans already prepared. In our instance, customer can customize it. So that's unique. Second step is also unique, and I discussed printing in 1 hour. Third step is the area that we're working on. Right now, it takes us 3 weeks to finish a unit, but we're experimenting with robotics so that we can cut that period a lot by 50%. Delivery. Traditionally in modular, people don't want to deliver more than 500 miles away because units can crack and drywall can crack. We've delivered all the way from LA to South Carolina. I mean, literally unlimited how far we can take the units. Installation itself takes 1 to 3 days because units are totally finished on site. We did over 7 million in revenue in 25, so it's huge growth in just 4 years. We achieved the positive EBITDA, some $600,000 in EBITDA last year, and our target is 24 million in 26. with us being able to open the second factory yesterday, we're on target for that. We generate gross margins that are higher than industry. Industry average 22 to 28%. We're at 35%. So we have a production scalable model. It's now replicating across the US and soon around the world. We've delivered over 100 projects and have some 62 million in pipeline. Factory economics, it takes $5 million to set up a factory. That's when we did our initial raise. Last year, we raised over $7.5 million. Colorado factory, the state provided 80%, so we're much less capital intensive going forward. And it takes us about 18 months to get full capacity, and every one of our factories can generate $20 to $30 million. So by the time we open our fourth factory, by the end of next year, we'll be a 100 million plus company. I've talked about us raising 7.4. It's now a little bit more, 7.5. We've raised more than any other. We're in the top 10 of the crowdfunding platform, crowdfunding raises, and we're on target to raise $10 million this in the next few months. And we started 4 years ago. Now we're going national. We're also, by the end of the year, we'll start doing 2-3 story projects. And in the near future, we'll go global. We already have one joint venture signed in Middle East. And we received tremendous recognition. Time Magazine, Best Inventions. And I'm right now from Fort Myers, Florida, where tomorrow we'll be getting Edison Award. So lots of great publicity, and of course, including South by Southwest, Fast Company, Innovator of the Year by Realtors. This just gives a breakdown. I mean, really, like I've said, we build a platform. So we started with smaller homes and ADUs. We do now units in hospitality. We're opening 2 incredible projects in the next 2 months for homeless in California. We're rebuilding homes in LA and in Palisades and Altadena. And our main focus is affordable housing, workforce housing. So really excited about being able to finish our mission. There's my information. More than happy to answer any questions.
Thank you so much for that, Gene. Here comes Teddy back in the line to start off questions. Go ahead, Teddy, you're on mute.
Gene, great job. Really fascinating company you have, and congratulations on the success. And really seems like you have this technology figured out. My question is so your raise page cites $62 million of orders in the pipeline with prepaid deposits. And I'm curious, we see a lot of startups talk about pipeline revenue. I'm curious what your thoughts are on how should investors really think about pipeline quality, specifically, what share of your pre-orders are permitted, what share is finance approved, what share could fall out because of site timing, customer level issues. Kind of how do you think about all those? Yeah.
No, very good question. In our track record now, it's for 4 years, is about 50% of the 62 million will happen in the next 12 to 18 months. So of the 62, quarter of it, 13 million projects already in the work. So they're finance permitted. Another quarter is a lot of our, rebuilding in fire affected areas is on the verge of permitted, and they're financed with insurance proceeds. So there is no financing contingency. Others are kind of all over the place. And so we're kind of targeting to really close and receive revenue, about 50% of pre-orders in the next 12 to 18 months. So that's why while we have 62 million of pre-orders, we're projecting 24 million in revenue this year. But the goal is to increase that pipeline. The more you have up, the more of it comes down to the bottom line. So that's what we're doing.
Got it. Amazing. Great. And looks like we have a couple questions from the crowd here. So one of them is what size units are possible, and do you have combination units for a larger model?
Yeah. No, that's the beauty of what we do. We produce these modules that are from 100 to 200 square feet. And so, units for the homeless are about 100 to 150 square feet. But we have park models that are 400 square feet, which are 2 of these modules. And then we just broke ground on a house in Malibu that's 2,200 square feet. It'll have 12 modules. So some of the projects in the pipeline are 150 units in Oakland and also 21 units in San Diego. So those are multifamily projects. they really come together as Legos, So think of it, whatever is divisible by 200 by 100, we can do and can customize very easily with our technology.
Great. Got it. And next, we have a couple folks from the crowd asking a similar question. So, who are your key competitors, and what are your key differentiators?
Yeah. In my previous slides, I listed competitors who maybe were doing crowdfunding or startups, but we really now see our main competitors are three established large modular manufacturers. It's Clayton, Champion, and Trico. They're the big gorillas. Two of the three are public companies, and Clayton is owned by Warren Buffett. It's a $10 billion, within those three companies that do $10 billion in revenue. Those are our competitors. We pretty much, our units are better looking. We can produce them faster. We can produce them less expensively. They have scale. So our biggest disadvantage is scale. So that is why we're raising money, because we're rapidly trying to get to scale, because the more scale we have, the better margins we can have and the better pricing we can have. But it's really kind of, company evolved from listing a bunch of startups that had all kind of challenges initially. We're now listing three existing major players in this industry, and we compete very well with them. And we're about to announce by the end of the month, one of their largest distributors is going to distribute our product. That's kind of a feather in our hat that we're now among the companies that distributors feel comfortable distributing. So that, very exciting time on our journey.
Looks like we could sneak in one last question, if you don't mind here. And you've talked a little bit about the company's successes, some of the kind of recognitions that you've gotten. You and yourself have already built a company to over 9 figures in revenue. Can you talk about some other key team members? You're never going about this alone. Just tell us a little bit about some of the folks that are helping make this vision come to reality.
I mean, I really have, and I was trying to see whether I have a slide on this. Unbelievable team. My business partner, Ross McGuire, I met him 7 years ago. We've been at this together from day one. He is brilliant. He's an incredible designer. He had his own business in England. He moved here, his master's in civil engineering. He's like as complete of a package as they come. Our director of manufacturing, Francisco, just joined us short time ago. Over a dozen years of experience in the modular manufacturing. Our tech team is second to none. Eli Rogers, been doing 3D printing for 7 years, and he's a young guy. It's like people didn't realize that 3D printing's been in existence this far. Our director of business development, Jack Tebow, who's been with me last year at the opening, he was one of the key players in the Colorado Economic Development Department. So he was on the team that selected Azure to come to Colorado, and now he is going to other states to help us grow nationally, working with B2B customers. Our chief financial officer, Anthea, she's been with me, even from previous to this, so knows us, just incredible team player. So I could go on. We have a team now of over 40 people. And this is my fourth startup. You mentioned I built a large company. I never had a team as experienced, as enthusiastic, and as committed to this. We really are passionate about solving the affordability crisis, solving homelessness crisis in our home. So unbelievable team, just so proud of them. And they're just that I wake up every morning excited to go to work to interact with them.
I couldn't put it any better. Thank you so much. I think that brings us to the conclusion here. Thank you so much, Gene. And again, we were speaking with Gene Eidelman, who is the CEO of Azure Printed Homes. Thanks again, Teddy, for hopping out and managing some fantastic questions from the community. We are 2/5 of the way through here. 2/4. Did I get this right? Other 3/4. You're just kidding. Just kidding. Halfway through here. Future Cardia is about to come to the line here. Jason Bang, why don't you start coming to the front stage here? There you are, Jason. So please go and kick us off, Jason. Tell us a little bit about what you're building with Future Cardia. Thanks much.
Thank you, Eric. Hello, everyone. My name is Jay Bang with Future Cardia. We're developing a tiny implantable cardiac monitor for patients suffering from atrial fibrillation and heart failure. This is a $70 billion a year problem that we're tackling. Let me start the screen share. There we go. So this is, like I said, Jay Bang with Future Cardia. We're developing an implantable cardiac monitor, one of the tackling one of the biggest healthcare expenditures we have right now. We're a startup. We implanted 39 patients thanks to our investors. We just did an FDA submission, which is one of the biggest hurdles that startups face in this stage. And we also raised a total of $24 million from physicians, industry reps, and our super angels. We're part of a Stanford StartX program that had over 12 unicorns produced, Tampa Bay Wave, and also Johnson & Johnson's J Lab. One of the most elite accelerators in the world. So imagine a patient with a heart condition, and one day it's a little bit worse than the other. So what do? Do you go to the ER? Do you wait it out? And that's where the problem is. And from a physician's perspective, you can't help them because you don't have the data. So you kind of refer the patient to go to the ER or wait it out and make an appointment. So that's where this a cycle of problems persists for our patients. So it's a tremendous anxiety and cost driver for the patients and physicians. So there is a little bit of solution out there right now. One is to implant a monitor under the skin, similar to what we're doing, but that is for an atrial fibrillation. It's not a full-blown heart failure device. And there's a pressure sensor device that you implant in the cath lab, and they're actually accurate, but complex, expensive, and low adoption. And wearables are something ideal for maybe a couple days, maybe a couple weeks, but not for a long-term solution. So there's a huge gap in the market that we're tackling. So our solution is similar to what's already out there. We'll implant under the skin in a 2-minute office procedure, turn it on, and you monitor. So data goes to the phone, to the cloud, and the physician will have access to that data. Very similar to what's already out there. The existing market is about $1 billion in revenue and dominated by 2 or 3 companies. We are already implanted in 39 patients, 100% implant success rate, over 100,000 hours of data for AI, and no serious events. The margin is really good. Just like any other implantable cardiac devices, we don't follow the traditional manufacturing margin. For our industry, 60% or above is the gold standard, and we're right now at 72% gross margin, and that's with a hand-built device. When we get to the mass scale, then the margin will go up to about 80%. Our revenue projection is pretty solid, similar to other implantable cardiac devices in our industries. So, 5 to 6 year projection is just under $100 million in revenue. Keep in mind the margin. You can have $100 million revenue and you can lose 120. Ours is roughly $100 million revenue with a 72% margin. And the market dictates the acquisition. So you can see these 3 companies that are already acquired with no commercialization. So the market dictates that ability to implant in patients, ability to go over the FDA hurdle, it in itself is a value. So imagine our company already tackling that and has a pathway to revenue. So we have a we're in the same situation as these guys are, but we are going to be able to accelerate far better than and faster than they have. As I mentioned, we do have competitions, and they are either a repurposed device or a complex device. So we fall right in between, and we are able to deliver the service, leveraging the existing platform while going after the complex solutions. Thank you. My name is Jay Bang, and I am on Start Engine right now. We are one of the top fundraisers. Just from the equity crowdfunding, we have raised over $14 million and additional funding from super angels and physicians and industry reps. Thank you.
Thank you so much, Jason. And over to you, Teddy, to kick off the questions.
Hi, Teddy.
Hi, Jason. Thanks so much. And great presentation. So, could you explain a little bit to us about your regulatory pathway, 510(k) clearance, why that's important and beneficial for your company, as well as the AFib pathway that was the implants into the 39 patients you have? Can you just give us some more kind of context around what that means?
Yeah, so 510K is the solution because there is an existing device that we're following a similar path. So similar to what Tesla have done, they did not build a road; they built a car to be on the road. Similar path, and also like other airlines, they're not building the airplane, but they're just uh, deploying the service. So 510K is the shorter regulatory process, which will allow us to enter the market.
Got it. And the AFib pathway, can you kind of go into that a little bit more and about kind of what that meant, what that means in terms of those 39 patients that you implanted the device on?
Sure. So there's two diseases and one device. So our device tackles both. So in order to get to the even bigger market like heart failure, the AFib is component of that heart failure. So we have to use that pathway to get to the heart failure market.
Got it. Great. And kind of on that one of your last slides there, you showed the competitive landscape and some big names there, Boston Scientific, Medtronic, Abbott, Edwards. Have they kind of what is their experience? Is it that they're so large that they don't have incentive to innovate? Is that the kind of reason they haven't created a solution like this? Kind of what do you see from the legacy players in this space today?
Yeah, yeah, and they're great companies, great products. They're dominating the market. Like you said, Teddy, innovation coming from a big corporate is almost very low, so they don't do that. It's easier, safer, and far more lucrative to purchase a startup like ours. And as you can see on the mergers and acquisitions, $1 billion acquisition in our industry is every six week kind of thing. So our goal is to increase value, meet milestones, and be a part of that acquisitions portfolio.
Great. And we have a question from the crowd here. How will it differ if someone wants to change from one previous model or a different company's kind of implant to your implant?
Yeah, so that is a decision between the physician and the patient. I personally would not recommend it. If you have a device that's working well for you, don't take it out and put a new one in. So that's number one. On the deep implants, like those one in the inside the heart, you have no choice. Those are implanted forever, so you cannot take that out. So under the skin, you have that option to take it out, but I would not recommend it.
Got it. And for in terms of regulatory clearance, FDA trials, kind of how is that going right now? Kind of what is the timeline and kind of capital requirements to get to a fully approved product in the United States?
Yeah, so we did all the testing and just submitted the to the FDA last month. So we're going to get our first round of questions end of this month, and then probably another 5 to 6 months of back and forth to get us cleared. So we're currently raising on Star Engine, and that will get us to that point. And we're also talking to family offices and strategics to get us to that phase as well. So what they're saying is well, we did 5 years of research and development and we're ready to launch, and that acceleration will be very rapid. So they want to come in now and in anticipation of FDA clearance, well, the valuation will go much higher. And as we expand into the commercialization and additional disease category, additional valuation will go up. So that's what the strategics and super angels are looking at, and as well as our investor base.
Hey, Jason, congratulations on your traction so far, especially your
Thank you, Eric.
fundraising success. That's an incredibly difficult process. So really, everybody here deserves pretty significant pat on the back for that, including you especially. You talked
You.
about how big companies might be more interested in buying over building. I think you're exactly right, especially in this space here. One of the reasons why they often do that is kind of an acqui-hire. They're betting on the jockey, not the horse. And so, can you talk a little bit more? I'm going to keep asking this question. I think. Can you talk a little bit more about your team? Then we got Dr. Burkhoff and Dr. Heist out here. Can you talk about how that helps support your MBA background to create this product and make yourself an attractive opportunity to be acquired?
Thank you. Yeah, so my second slide was the grit and boldness. We have a tremendous team, and this is a very niche of market where there aren't too many engineers that can do this. You could be a rock star engineer building rockets, but that skill does not translate into an implantable cardiac devices like ours. So as a group, we have over 100 years of expertise. Uh, I worked as an employee that had two exits with the IPOs. And I had one huge exit as an employee at Abiomed that had a $16 billion exit to Johnson & Johnson. A few of our colleagues also had a couple exits to a company called LivaNova, Boston Scientific. So in terms of our expertise, extremely focused on implantable cardiac devices. We don't do wearables, we don't do orthopedics, none of that stuff. We've just built electronics that we implant inside human beings. And also the advisory group. We have tremendous physicians groups that are focused on not only publications and uh, frontier of science, but also seeing patients. These are the guys that would, I have one advisor, he does house calls. So these are like what I call real doctors that argue with patients and having discussions with patients. So we have a good balance of forefront scientists, physicians, as well as everyday grinding it out with patient type of physicians. Oh, one more
Fantastic.
thing.
Yeah,
We're
yeah, please.
part of one of the biggest accelerators, most successful accelerators. Stanford StartX had more unicorns than Y Combinator. Johnson & Johnson's J Labs had, as a group, had over $1 billion in funding. And also I was part of Y Combinator, but I ended up dropping out. So we have a strong backing from the accelerator communities.
I think people undervalue J Labs. I'm not sure if you're still down there in San Diego, but when I practiced at Cooley, our San Diego office did a lot of work with the Johnson Johnson J Lab, and there were some incredibly talented, groups coming out of there as well. So don't want to
Thank
undersell.
you.
StartX, I think, is
Oh
very
yeah,
well recognized,
absolutely. Yeah.
but J
The
Labs is
one that
no.
I was Yeah, the one that I was part of is the one in Houston. That's
Okay,
where we focus more on the devices. San Diego is great. They're more of biotech, I believe.
gotcha. Thank you so much. And I do want to give a shout out to somebody who mentioned in the chat here. Happy to be an investor. They say I am an AFib survivor. So I think we had to sneak that in there.
Oh,
Thanks for
thank you.
sharing that
Thank you.
context.
Appreciate that. Thank you.
I think it puts us on a perfect timeline to transition to our last, and now that I can count to four, our last presenter here, which is Annette Azan with Nuudii System. Come on up to the front stage here, Annette. Welcome, welcome. Awesome. So I'll hand over the reins to you, Annette Azan, CEO of Nuudii Systems. Thank you.
Thank you. Let me share my screen. Here we go. So welcome to Nuudii System. I'm Annette Azan, the founder and CEO. Nuudii System is boobwear for women who hate bras but don't want to go braless. I'm sure I'm speaking to a lot of men here, but I'm sure you've heard it from the women in your life. We are not making the same thing. We'll leave that to Skims and Victoria's Secret. They have not solved the problem because they have been iterating, sidestepping. We took it down to the ground and built something completely different to deal with all of the problems that are inherent of bras, which goes to how they are made. They are a rigid fit, a rigid construction, so the fit doesn't work, so they're complicated, so they are really uncomfortable, and they actually don't work with most clothing because they lack versatility. So I made the first Nuudii actually for my wedding dress, and that was 15 years ago, and I made it out of a fabric never used for this part of the body. And so let me show you what it's like in real life. It's made out of the finest fabric, the finest yarns, and it gives you a lot of versatility. It actually feels like a second skin, and it has no hardware. What we are building is something that is landing between bralessness and bras. That category is called boobwear, and that is something that we have trademarked so that we have ownership of that. And we are cutting into this $100 billion market that has very, very little innovation up to now. I mean, bras have been around now for 100 years. And according to YouGov, 50% of women hate bras. And they have found in 2023 that 21% are actually, and it's growing, are moving away from bras and looking for alternatives. We own 6 patents. This is our hero product that accounts for 83% of our sales. We launched on Kickstarter in 2019, sold $1 million worth of just this product, and knew that we were onto something really different. This is our traction. We are selling into 40 countries. We now have over 30 products. Every one of our products are made completely different. Even our underwear is not regular seamless. It is made in our own way. We have our own factory in Turkey, which is just set up to make Nuudis because Nuudii is so unique. We have over 100,000 customers. We have a cumulative 14 million in sales, and we've sold 250,000 Nuudis. These are some of our highlighted tractions. Our AOV, actually, as of this past month, it's now 76. I think on this, a couple of the highlights is our return rate is 4% and below in an industry that has 37% returns because bras don't actually fit, because bras are made in that rigid construction sort of way. This is a margin killer. Okay, so I'm really happy with what we have here with 4% consistently. We have a lifetime value. We make money on each sale. We have strong gross margins of 75%, and we have a really nice returning customer rate. Our social presence is strong. We have over 300,000 followers throughout all the social media channels. We do everything different. Nuudii is a packaged CPG product, which is never going to be on a hanger. And so this actually offers wide distribution channels. When we set out to make Nuudii, if you think about hosiery or packaged underwear, things like that, it's grab and go. You don't have to try it on, which means that we see branded vending machines in malls, airports, colleges, also branded vending in some of the big box stores. Nuudii sells itself. We have very, very strong, I like to say we're a media company selling really good product. We do media really well. Our videos sell the product. So we do not have to go about it the same way that other companies do, which is, wholesale, cut down your margins, et cetera, et cetera. We are seeing Nuudii going into wholesale in vending machines. We have a very strong moat. We have defensible IP, which we have had to defend against some large companies. We've approved trademarks, and this is both domestic and also international. We have 7 years of design and development. This was not an easy lift. A lot of people ask me, well, why didn't Victoria's Secret do it? Victoria's Secret does not spend this amount of time and energy on anything like 7 years of design and development. We really made something new. We had a very sophisticated manufacturing process, which is not easily replicated. That's why we keep it close within our own manufacturing plant. We also have a model that allows for easy cash flow. We have weekly shipments coming from overseas so that we can pivot when something is selling out. As I said before, our unique packaging, which allows for a much broader distribution, and we have a very strong brand culture. I mean, women that hate bras that go to Nuudii, they're Nuudii forever. And this category, it's a game changer. And I like to say for men, Nuudii is like leggings. When leggings first came on the market, it really cut into the pants market. Okay, it fits the same. It actually covers the same part of the body as pants, but it is a completely different market, and it's not going away. It has only grown. That's what boobwear is to bras. It's not competing with bras. It's actually making them irrelevant. This is our sale growth. We actually launched after Kickstarter in 2019 and have had a nice slow growth up until this year, which we are accelerating to get to the 6.5 at the end of this year. And we've had a really strong start to the year. We have raised to date only 1.8, which has taken us through those years of development and also helped us with manufacturing, et cetera, up until this date, which is a pretty good calculation when you think that we've done 14 million in sales. This is our team. I actually work with my two daughters, who was there from the very beginning, sewing the first Nuudii on my body years ago. We have the A team. These women and this man They know what they're doing. These are media experts. I'm the expert of the product, and they're the experts of the media and branding. And we are scrappy, and we're on the ground, and we're excited about the year ahead. And that's Nuudii.
Thank you so much, Annette. Appreciate you sharing the good word about Nuudii. We're going to get, let's get Teddy on the line here to start us off with questions.
Okay.
Perfect. Welcome, Teddy. All right.
Yeah, hi, Annette. Great to see you again.
Hi, Teddy.
Great job. So, you've really built Nuudii over nearly a decade, since 2016, as you mentioned, scaled to over 100,000 customers across 40 countries. Can you talk to us about kind of what specifically changed in your operating approach over the last 2 to 3 years that has enabled you to begin to see accelerated growth now and kind of reach the 3.7 to 4 million in revenue that you now have?
Yeah, so we really started to build out. So we were exclusively boobware. So that hero style that you saw, we ran on that for actually a few years. And when we started to do development, and that's where we've come up with our 6 patents now. So we have really core boobware style. So extending the choices so that customers have things to come back to. And every Nuudii style actually solves problems. We don't just build to build, we build to solve. So this has really, really helped us. And we've been in learning stage. I mean, we've learned a lot. We went viral 2 years ago on Kickstarter, really accelerated. Kickstarter, on TikTok, really accelerated our sales. We never thought we could do those numbers. When people see the product, they get the product. So we were really in learning stage, and we know what we're doing now. So we're putting the metal to the foot to the pedal, and we're accelerating. Yeah.
Yeah, amazing. And congrats on all the success so far. And we have another question from the crowd here. How much percentage of users have changed to your product in the past year? So I guess kind of folks transitioning from kind of more traditional companies to yours.
Well, I mean, we have over 100,000 customers. So it's interesting. We have set up advisory committees, which we change every year with new women. And one of the questions is, do you wear Nuudii all the time? Right. So and I'm probably not going to be able to concretely answer that question, because some people wear Nuudii all the time. Some people just buy Nuudii for traveling or buy Nuudii for yoga. And I would like to go back to the leggings again. Like, some people wear leggings all day long. Some people just wear them to work out. It doesn't matter. It's not an and or. It's that everybody, like leggings, should own a Nuudii, because they'll find a place, because it's a solution-driven product where bras and sports bras cannot solve.
Yeah.
I think that goes directly to one of the questions that came in, and how is boobwear different from sports bras and other sportswear? And I think you really addressed that one as well. So you kind of looped that in perfectly.
So yeah, Nuudiis let the body be. It is not compressive. Sports bras and bras are compressive, and they also reshape. Nuudii hugs the natural shape. So net positive there, okay? Because what does that say when you have to be compressed and reshaped? That actually gives you a very bad negative image of yourself. Like, I'm not all right being in my natural shape. And that's one of the ethos of Nuudii, is you are all right just the way you are.
I love that. It feels like it's safe to say, if you're a person that comes home and the first thing you do is unstrap your bra, then maybe this is a solution for you.
Yes, and it's a solution to getting dressed, and it's a solution to lifestyles, because, like the iPhone, it's like, oh my God, how do we ever live with an iPhone? When you get a Nuudii and you can go, oh my God, I have one shoulder, I'm just going to do this, or I'm going to go to yoga and I strap my straps like this, or I'm going to go to travel, and it's this one thing that is actually working for you. You're like, how did I live without it? It's like that iPhone.
Well, we did get a great question that I think a lot of us are thinking, coming about demographics of the clients. Can you speak to, again, it feels like a wide sweeping application, but can you talk a little bit about, are there kind of, is it bimodal? Are there peaks?
So interesting. So, obviously, I mean, I'm a different generation than most of my team. And when I came to Nuudii, at the beginning when we launched, it was younger. It was like 25 to 35. For the past 6 months, we've actually seen the demographic shift to 35 to 45. We have also 65 plus. We have grandmothers buying it for their granddaughters and their daughters. We're seeing across spans generations. And I think this is because, and women come to Nuudii in those different demographics for different reasons. Like, women that are older just want to be themselves. They're like, this is my last, my last decades or whatever. I'm just going to be myself. Women who are in their 30s are busier than ever. They want to grab and go. They have careers, they have families. The younger women have grown up with comfort and being themselves. They've also grown up with brawlessness. So this is like, the sidestepping to brawlessness. So, it's exciting because I've never seen products in all my years, and I've been in the fashion industry my entire career, where it really spans generations.
Love that. I think that we have enough time for maybe we could sneak in one last one. Yeah, I think
Yeah.
it's kind of fun. So somebody speaking about collecting specialized colors, other kind of the unique elements that are coming to play here. And if you could pepper in, I know you have a great DTC approach here. Is there a plan to partner with retailers? It feels like this does really kind of naturally fit with athleisure, even though it's not an athleisure product. If you can kind of sneak in both of those in this last question, would love to hear your thoughts there.
Yes, yeah. So we have new limited edition colors. We've continued to have we have many different styles, right? Many different systems, which has been the most exciting things. And now we also launched buttwear. We launched body wear, but it's along the same ethos where it's not constricting you, but it's hugging your natural shape. And we're just about to launch swimwear next week, which is taking our IP patented products like the two strap and our strapless into swim. So it is expanding in that way. And then to talk about retail partners, just had free people that just reached out to us today. We are in boutiques now. We are just signed with a distributor in the EU, which is super exciting. We have a really strong European customer base. So we are going to be going into wholesale in the EU. We're also setting up a distribution center in the EU. And part of this raise now, because we are raising on WeFunder, we actually just launched. We are going to be using that money to start development with sustainable yarns. So our packaging is completely sustainable. It's made out of sugar, so you can throw in the garbage. We have no hardware on our products, so we want to be able to have you throw it in the garbage and it's you don't even have to put it in recycling. You can just throw it away and have it decompose. So we're going to be working on that development, and I'm super excited about that. But right now, in terms of sustainability, the way that Nuudiis are made, there is little to zero waste. And we have a very strong recycling program that we started. Anybody can send back their Nuudiis. We recycle them at no cost to them. And we're really proud of that.
That's fantastic. Well, let's say I love that you have such a strong team focusing on marketing and influencer marketing and all the content creation. I think that's an incredible piece that'll be really, really important here. Two thoughts I'd love to share with you that are coming in here that aren't questions, but seems like this is a health play as well. Anything to help women get healthier is huge. So I wanted to say that's part of the feedback. Love that. And then as we transition to the voting point, somebody did mention difficult to vote for just one of these solutions. And I agree. I don't envy the voters trying to decide here, but everybody who spoke today is a winner in our minds because you allow your community to come in and grow with your company. So huge shout out to everybody who presented. Thank you so much, Annette Azan, speaking about Nuudii System, the CEO of Nuudii System. Thank you, Annette.
Thank you.
I get to keep Teddy now. And so thank you so much for all of our presenters. Before we go to the vote, and you can see that coming up right now on your screens, the poll and quizzes should be up right now. We see that coming in. Before we go to vote, though, I'd like to hand it over to Teddy for a few closing thoughts on what he just heard today. Teddy, that's a lot of good stuff right there.
Yeah, really four strong companies. And I think really kind of shows, equity crowdfunding has so many great companies across different industries. We saw CPG company, medtech, 3D printing in tiny homes, renewable energy, solar energy. So I think just really kind of showed, high quality, great traction. And I think kind of speaks to the evolution that equity crowdfunding has gone on. Eric, I'm sure you know this better than most, is I think early on in crowdfunding, there was a lot of, it was you were funding an idea most of the time. There wasn't companies that had really solid traction, real kind of clear growth plans. And I think now it's just a completely different spot where the quality of the deal flow coming in through equity crowdfunding, it's just really blown me away. I've been at Kingscrowd for 4 years now, and it's just kind of night and day between kind of in 2022 to now in the quality of companies we're seeing. So I really enjoyed that pitch session. I'm glad I don't have to vote. I will have to vote at the championship pitch session later, so I'm bracing for that. But these four were great, and yeah, can't thank them enough for sharing their time with us.
And I think I'll use this moment to share. And I see this actually coming in right now. Somebody says King Crowd does a tremendous job of screening these startups too. I'm going to replace screening with reviewing and kind of documenting and analyzing these companies. Early on, and I shared this with some of the panelists here. When King's Crowd raised their first 100,000 and then first million on Netcapital way back in the day, what part of the reason why we were so excited to advise them and help them grow was because we knew that the industry needed a Morningstar and a kind of ecosystem, like a pitch book, an ability for early stage retail investors to be able to come in and learn about these opportunities. And you guys serving that role in the ecosystem is a big piece of why we are, I think, a much stronger candidate for great companies than we were in 2018 when I joined the ecosystem, in 22 when you joined as well. So super grateful for the incredible good work that you, Teddy, and we're going to hear from Chris Listrino later. Shout out Chris. And the entire Kingscrowd team does incredible work. The whole industry benefits from your work.
Yeah, no, appreciate those thoughts, Eric, and the compliments. We all the deal reports for these companies will be unlocked kind of as a thank you for attending today's session. And yeah, these are four really strong companies that what came through our due diligence pipeline and through our ratings algorithm, and kind of we really identified as some of the strongest companies raising in the market today. So yeah, it's great.
I just got note we're going to allow for one more moment for the votes to come in. I've never seen a vote quite
This is
this close.
close.
It is
Oh,
close. So we're going to allow just a little bit more time to see if something starts to edge out here. 83% of folks have participated. So we're trying to get that a little bit higher. If you haven't voted yet, you still have time. You should see a Group E pitch session vote. So we're going to allow just a little bit longer because it is neck and neck. Um, so in the meantime here, maybe Teddy, do you want to tell a little about if somebody is interested in learning more about King's Crowd and potentially maybe owning a piece? Should we talk a little bit about that for a
sure.
moment?
Yeah, absolutely. So yeah, of course, if you're an investor in this space or a founder or industry professional, you kind of want more insights, analytics, data analysis on equity crowdfunding space, go to kingscrowd.com. You can sign up for a free trial there and kind of see everything we have to offer around company analysis and portfolio tracking tools, all that good stuff. And yes, we are raising around on Start Engine. We've raised, I don't want to misquote the number, so Chris will say that later, but we've raised all of our rounds through equity crowdfunding, and has just been a great experience so far, and kind of really shows this industry that we're experts on, is also backing us as we raise our own equity rounds. So yeah, check out our page on Start Engine. And if you're an accredited investor and interested in our VC funds, we have two VC funds currently open. One is an Outperform fund, kind of a generalist VC fund that invests, any company stage in any industry. And then we just launched our profitability fund, where we are investing in profitable companies. We've seen more and more of those kind of come through the equity crowdfunding markets these days. So that's a thesis that's really been resonating with investors, and feel free to reach out to me on anything, Teddy at kingscrowd.com, for any questions on any of that.
So I think that is fantastic. So this is outrageous. The results are in right as we were spoken here. I think Teddy, do you want to do the honors?
Yes, so after a very, very close vote, Future Cardia is our winner today by one vote. So, and second and third place are a tie, the tie for second place, the same number of votes. So really, really close one.
Congratulations.
Yeah, congratulations, Jason, Future Cardia. Really amazing company. But thank you, of course, to all four companies that pitched today. And I think we can get Jason on for a little victory lap here if he'd like.
Yeah, congratulations to all four. I want to reiterate that was an incredibly close vote there. All the folks on here. I like to remind people that oftentimes people say their greatest fear, their second greatest fear is death. That's the number two fear. The number one fear is public speaking. So people most of the time would rather die than publicly speak. So the
yeah.
folks that came on here and presented and shared the opportunity to come in with the fear of failure, all that good stuff. So Jason's on the line here. Come on in. Congratulations, Jason.
Thank you,
Future
guys.
Cardia.
Thank you for the panel. Thank you for the all the investors on the platform. Thank you very much. It's a huge honor. Thank you.
Yeah, thanks so much, Jason. And we'll see you in I think it's about an hour for the championship pitch session. Everyone here as attendee, definitely tune in to the championship pitch session where the winner will receive a $5,000 investment from Kingscrowd, and we'll feature all the pitch, the Group A, B, C, D, E winners pitching against each other. So should be really exciting. But yeah, thanks so much,
Great.
Jason. Great job.
I appreciate that.
Thanks, Jason.
I'll see you in an hour.
See you in a bit. Okay,
All right.
I'm going to go and transition now. Thank you so much for everybody who participated. Thank you very much for your thoughtful questions. Thank you so much to our panelists and our gracious host, Kingscrowd. A couple more thoughts and thank yous. Thank you, Teddy, of course. Thank you to all of our founders in Group E. We appreciate you sharing your work with this community. The voting prompt has been successful, and we do have the championship in just about an hour here. So do make sure you attend that, especially if you missed other sessions A through D. Thank you again to Fidelity Investments for sponsoring this session. The Kingscrowd team will tally the results across all 5 groups, and the championship again is in just about an hour. So I look forward to seeing you all at the finalists, but thanks again to everybody who makes this possible, especially our gracious sponsor, Fidelity Investments.